All right, so now we've made it to chapter 3. Chapter 3 is going to be very similar to chapter 2, but what we're going to do is we're going to put it into what's called a general journal. So real quick, we're going to go through a little PowerPoint, but this will explain a couple of different things that we'll be seeing in chapter 3, and then we'll do the work together. So in chapter 3, we are dealing with general journals. So these things are to help us, it's going to help us with our general ledgers, but general journals are going to be used throughout all of accounting. So they're really quite important. But with that, you've been given transactions, like you received money from sales, but in accounting, in the real world, you will not receive that. And we're going to give you what's called source documents. And these are an example of a source document. So the first one is a check. And what has to be behind checks is cash. Cash always needs to be behind a check, or it's an insufficient money. So whenever you see a check, this means that you paid cash for something. They won't say you wrote a check. It will say you paid cash for supplies. Well, how you did that was usually you would have wrote a check. So this is an example of a check. The other ones are sales invoice. This is usually when you sell merchandise or services on an account. So it will tell you the company that you used, that you needs to pay you, and you give them this sales invoice. Other source documents that we have, you have a receipt. This is when like you receive money. I like to think of receipt, receive, right? Memorandum. I love these ones because they actually just put the transaction in them. But it usually will tell you like you bought supplies on an account or something like that. And a calculator tape is for when you have created cells for like the day or maybe a time period, and you have what's called a calculator tape. So you would receive cash from cells. Okay, with these, they all will be a source document. So when we receive a general journal, I'll show you where they get put in. And right here on the very first transaction, it will say that you have a receipt number 1. We're going to abbreviate all of our source documents, and we're going to use that first letter. And so it'd be like R and then 1. The only one that will not use the first letter is calculator tape, because we're going to use C for checks. Calculator tape starts with a C, so we actually go to the second word and use tape. So it will usually say it on the calculator tape and say like T12 or T whatever. So that's the only one that we won't use like the first letter. So like memorandum, we'll use M, and then you find the number. So right up here in the right corner is the memorandum. Receipt is going to be the same thing. It's going to be R, and then you find the number. This is just so that you are organized and that we can find that receipt or whatever. So I'm going to give you an example here. We received cash from owner's investment for $5,000. And we found this out by receipt number 1. So this is what it will look like in the general journal. In chapter 2, you did T-charts, and that is an example is right down below right here. In Mindtap, they've already kind of trained you that debits go first in the T-charts. This is going to be the same thing in general journals. Debits will always go first. It's always going to be on the first line, and credit goes second. So that is something to kind of remember. And there will be a slight indentation for the credit, just so that we don't have everything in like one line, so that you know it's just this is a transaction. So you first write out the date that is given to you. Then you will write the account title of the debit and also the amount. So cash, and then debit over here for cash. And then you will, for number 2 and 3, you're going to write the credit, which was the capital. So for 5,000, and you're going to put the number over here. And then you're going to write the source document number. So R1 or S1, however you received it. We received it from a receipt, so it's R1. So that's how we're going to kind of do it. So let's go to our work together. And the work together, you're going to look at the transactions up top. Remember your chart of accounts. These are the accounts that we'll be using throughout these next work togethers. So the first transaction, you received cash from an owner's investment. So you come down here, and I have mine on another screen as well, so I won't scroll back up for transactions, so you can just read your own. So it happened on April 1st, and we received cash from owner's investment. So remember, we're doing the business, we're not doing the owner's books, we're doing the business books. So I have to ask myself, am I buying or receiving as a business? And I'm receiving money, so I'm receiving cash. And I found this out through receipt number 1 for $2,800. And if my cash is going up, usually my owner equity is going up, which is my capital. So we have to find whose company it is, and it's Norma Dirks Capital for $2,800. So these will always be identical and we usually only use 2 accounts until we get a little further into the chapters. So your debits must always equal your credits. The second transaction on April 2nd, we paid cash for supplies. So I have to ask myself, am I buying or receiving? And I'm buying. So then what did I buy? I bought supplies. And I found this out through check number 1 for $415. And how did I pay for it? And I paid with it with cash for $415. All right, so don't be too overwhelmed. This is exactly what we did in chapter 2. Now we're just moving it to general journals. So if you need any other help, let me know, and we'll go from there.